Hey, my name's James Nicholson and welcome to my YouTube channel. In this video, this goes against what's been going on in the last 2 weeks. They've got a major lender that has actually cut interest rates, mortgage rates, the rate that you borrow at this week, which is good news. Now, there's a reason for that, and we're going to talk about that, and maybe could other lenders be set to follow suit? We had, at the back end of 2023, in December, and then the start of 2024, a lot of lenders actually decreased their interest rates. And that was because of something called a swap rate. So banks, they borrow from bigger banks and they borrow on something called a swap rate. And that had been dropping. They also reduced their rates because they lost lots of business last year. In fact, some banks had 20% less transactions last year than previous years. And so that meant that they were fighting for our business. But then in January, things got busier. Inflation data wasn't as good as it had previously been, but because the market was busier, they didn't need to fight for our business as much. In fact, they were inundated with inquiries because they dropped rates, and that revitalized the market somewhat temporarily. But since then, because inflation hasn't been going as well, the swap rates have been going up, the rate that the bank borrows at, and so they pass that on to us. And so we've seen nearly all lenders in the last 2 to 3 weeks have increased their mortgage interest rates. So in this video, we're going to talk about who's actually dropping their rates, what that means for you, and could others be set to do this too? Now, before we jump into this, as always, if you haven't subscribed to the channel, do that over there. Subscribe to the channel and hit the bell notification. Our goal is 50,000 subscribers this year. Hopefully we can make that. So every subscriber really helps. And smash the like button or tickle the like button. Do something to that like button, guys. That really helps us with the YouTube algorithm. I want to hit 5 million views this year. And every time you do that, it pushes the video out to more people on YouTube. So I really appreciate everyone that does that. So we've got a lender, Coventry Building Society. And these guys do some decent lending and have some fairly decent rates. Now, they are cutting all of their interest rates. In fact, they are removing one product. So let's talk about that first. They are removing on buy-to-lets 80% loan-to-value deals because they probably just see those as a little risky at the moment, with the market potentially moving down at some point. So most lenders anyway are 75% loan to value. So they still have 75% loan to value deals, but they don't have these 80% deals, meaning you'd only need a 20% deposit. I've never used those deals because normally you find they have a much higher interest rate anyway. I think 75% is normally the sweet spot. And so they are reducing on 2-year fixed, on 5-year fixed, on residential and on buy-to-let mortgages. So this is really, really good. And they're doing it on interest only and repayment mortgages as well. So that is really, really good. Now, it doesn't impact their existing borrowers. If you're already in a deal, you're not going to see much change here. But why has this happened? Well, the swap rates temporarily in the last week did drop again. And so we saw the rate went down about 0.25%. And so that meant that Coventry could have bought some money, a certain amount of money. They could have ring-fenced that and said, look, this money we're going to use for lending, and we're going to go back out to the market with some cheaper deals. Now, normally this takes a little bit of time to come to fruition. So you'll see a swap rate drop, but it normally takes on average 2 weeks before lenders start dropping those rates to us. So there's a chance that other lenders have done the same and have ring-fenced a certain amount of money. But here's the thing. The swap rate since has started to go back up again. So this is similar. Last year, we saw a deal with an Indian bank that came to the market with a deal at 3.5%. I think it was, maybe you can recall, I can't exactly. It was around 3.5%, but they only had about £100 million which is a lot, but not a lot to a bank. They had about £100 million that they were able to lend at that rate. So here's what I'm saying. I'm saying if you are looking for a deal and in the next couple of weeks you see one and they drop, I think it will be a temporary drop, and it will be to get some headlines from some of these lenders. They'll go out and say they drop rates, so we forget about the negative news that they had in the last 2 weeks of interest rates going up. I would jump on that rate. I'd get that rate secured and get your deal going through as quick as you can, because I think it will be a very limited amount of money that this will be for. And big lenders, this could go quite quickly. So they will maybe get 500 million or $1 billion, which might sound like a lot to you, but to them it's not a lot. And if they get all the newspaper headlines and all of that stuff that goes off the back of dropping rates in this market, they'll get inundated with applications. So keep your eyes on the market. Any deals that come on, I'll be sharing them on this channel. Any lenders that I see that are dropping, but I think this is the possibility in the next 2 weeks, but I think it will be a very, very short window where you could get a deal and then the rates will go back up. So the swap rate has gone back up to where it was about a week ago now, and so that's where I think things could happen and what could happen. Or alternatively, those lenders might have just got a load of that money in and just make more margin. Like, that's an option as well. Let me know, what do you think is going to happen in the next few weeks with interest rates? Do comment below. I love all your comments and suggestions and stuff like that. I personally reply to every single comment on this channel. And let me know, what are you doing at the moment? So my suggestion for you is, if you have a mortgage that comes up in the next 6 months, fix a deal today, because you can go to your lender, you can fix that deal today. Even if your deal doesn't expire for 6 months, fix that deal today, and then you know that that's your worst case scenario. So if rates go up, you're fixed in at that rate. But if rates go down before that deal actually comes to fruition in 6 months, you can swap onto that better rate moving forward. So that's really, really important that you let people know about that. Maybe get someone, if you know, that wants to remortgage, to come and watch this channel, share some of the videos and stuff like that. I think that's really, really important. And this week we've got a special on the Lease Option Accelerator. It's a very, very good program on how to secure properties and control them from as little as £1. We've got it on a flash sale at the moment for just £149. So I'm going to link to that in the description. Go and check that out. Get enrolled in the Lease Option Accelerator. I think you'll find it absolutely incredible. Do check out all the other content on my channel, including this video right here.